Hello and welcome to Markets Way of Deven Choksey, your daily market podcast where we decode the Indian financial markets. The GIFT Nifty this morning is trading flat, indicating a muted start for the Indian markets. The Asian markets have opened lower, where Nikkei and Kospi are falling up around 0.6% each. And if we have a look at the US markets, the US futures trade lower after cash market ended in the red on Monday. The US market ended lower, where Dow Jones did fall around 0.7%, S&P 500, Nasdaq ended near flatline. Stock-specific approach, McDonald's did fall more than 3% on lower than estimated quarter four earnings data. Nvidia ended at a fresh record high after Goldman Sachs lifted company's price target. US January S&P Global Composite PMI final at 52 versus 50.9 on a month-on-month basis versus the estimate of 52.3. And US 10-year yield is steady above 4% after data shows a services sector expand on faster rate. Talking about energy pack and bullion market, the Brent crude rise around slightly to $78 a barrel amid geopolitical tensions and Secretary Blinken's visit to West Asia. And last but not the least, gold prices did fall further as treasury yields continue to remain above 4%. Let us take a look at the trade setup for today's trading session. Taking the cues from what happened yesterday, the Nifty 50 is up for the week after a strong start to the February F&O series, the Thursday trading session. If we have a look, of course, however, the last two sessions are proof that it still lacks the strength to cross the barrier of 21,750 to 21,800 mark. A potential combination of too many expectations from an interim budget, of course, one of the event and the weekly options expiry ensured that the Nifty 50 ended near the lowest point of the day on Thursday, almost at the same level that it ended a day earlier. PSU banks were the only bright spot in an otherwise quiet market, as all constituents barring State Bank of India hit a 52-week high after the government's better-than-expected fiscal deficit projections sent bonds to be their biggest single-day drop in 9 months. The market is expected to remain range-bound in the coming sessions until Nifty 50 takes out the immediate hurdle of 21,850 on the higher side, while the 21,500 is expected to be a support area. If the index manages to decisively surpass 21,850, then the rally towards previous record high can't be ruled out in following sessions. On the 1st of February, the interim budget as well as the FOMC meet outcome remained non-event for the market, and the benchmark indices ended moderately lower amid volatility. Sensex was down around 107 points at the close at 71,645, while the Nifty 50 did fall around 30 points to close at 21,697 and formed bearish candlestick pattern on the daily charts with higher high, higher low formation. 21,800 to 21,850 remain an important resistance zone for the Nifty index, which needs to be surpassed for resumption of the uptrend. Until the index takes out this hurdle, we might see some consolidation or a time-wise correction phase. Above the resistance, there are chances that Nifty would have potential to rally towards the previous highs, and on the flip side, 21,450 followed by 21,300 are the immediate short-term supports. The volatility cooled down considerably during the day on Thursday, which resulted into a range-bound session for the market. The India VIX, the fear index, fell by 10% to 14 levels. Let's take a look at the support and resistance levels. If we have a look at the Nifty first, Nifty is likely to see immediate support at 21,663 followed by 21,622 and 21,556 levels, while on the higher side it may see immediate resistance at 21,796 followed by 21,837 and 21,904. Meanwhile, on February 1st, the Bank Nifty demonstrated strength and outperformed the benchmark Nifty 50, and as index closed above 46,000 mark on the interim budget day, the banking index rose 192 points to close at 46,189. Overall undertone remains still bullish, with support at 47,800 providing a cushion for the bulls. On the upside, the immediate resistance is positioned at 46,500, and a breakthrough at this level is anticipated to trigger sharp short covering moves in the market. Bank Nifty is expected to take support at 45,811 followed by 45,660 and 45,416, while on the higher side the index may see resistance at 46,299 followed by 46,449 and 46,693. Let's quickly take a look at the stock specific action and taking what the important numbers are going to be. And let's have a look first at the result season. Tata Motors, UPL, Delivery, Bank of India, Aegis Logistics, Bikaji Food International, Devyani International, Engineers India Limited, Interglobe Aviation, JSW Infrastructure, LIC Housing Finance, Metropolis, Moil, Torrent Pharmaceuticals and Deven Financial Services will be in focus ahead of December quarter earnings on the 2nd of Feb. Now let's take a look at the stock specific action. We start with Hero MotoCorp, the world's largest two-wheeler maker, recorded total sales of 4,33,598 units in January 2024, rising 21.6% over a year ago period, with domestic sales increasing 20.5% on year to 4.5 lakh units and exports surging 74.6% to 12,664 units for the quarter. The next stock in action is Abbott India. The pharmaceutical company registered a 26% year-on-year growth in net profit at 311 crore for the quarter ended December FY24, backed by healthy operating numbers. Revenue from operations grew by 8.7% to 1,437 crore compared to same period last year. Keep an eye on Eicher Motors as the company's flagship brand Royal Enfield sold 76,187 motorcycles in January this year, rising 2% over 74,746 units sold in same month previous year. However, export sales dropped 20% year-on-year to 5,631 motorcycles during the month. Keep an eye on Panacea Biotech as the United States Food and Drug Administration has classified the inspection of Baddi Himachal Pradesh facility of the company's subsidiary Panacea Biotech Pharma as official action indicated. Sonata Software will be in action as the IT services company swung to consolidated net loss at 46 crore for the quarter ended December FY24 against profit of 124 crore in previous quarter. The profitability was impacted by exceptional loss due to change in fair value of acquired entity, that is Pond Systems Inc. Consolidated revenue from operations grew by 30% sequentially to 2,493 crore for the quarter. Keep an eye on Bata India as well, as the leading footwear company recorded net profit of 57 crore for October-December period of FY24, falling sharply by 31% compared to year-ago period, impacted by tepid top line and weak operating numbers. Revenue from operations grew by 0.4% on a year-on-year basis at 904 crore for the quarter, driven by premium categories despite muted demand. So these are all the stocks and news. Let's quickly have a look at the FIs and DIs data which we need to consider for the day. FIs net sold shares worth Rs 1,880 crore, while DIs purchase shares worth Rs 872 crore worth of stocks on the 1st of February. So this is how the trade setup for today's session looks like. Of course, an important event has passed and a new trading session, the last trading session, in fact the Friday session is what we are going to watch out for today. With this, we come to the end of the market podcast for the day. However, like we always say, irrespective of market conditions, keep an eye on the research, as it is the backbone of successful portfolio creation, and research is the art that we clearly understand. Stay with us and hope you understand and like and really feel good about the podcast and the market research which we are presenting to you. Thank you and have a great day.